the American Health Insurance Company, also known as United Healthcare. The company's stock has been devastated for almost a year, and recently, Warren Buffett, one of the greatest investors of all time, thinks that there is an extraordinary value at these levels, not just average value, but the stock has been extremely oversold, and based on the history of this company and its fundamentals, that this is an incredible buying opportunity at these levels. If it's good for Warren Buffett, it's good for me. But in this video, we're going to cover some of the important, amazing facts about this company, a brief history of this company. In the second part of this video, we are going to cover the current fundamentals of this corporation. This is the reason why we want to invest in this corporation. And in the third segment of this video, we are going to look at the charts, technical analysis. It's going to give us areas of interest on when to buy the stock so we're not guessing. We are going to implement successful, proven investing and trading strategies by some of the greatest investors and traders of all time, including Warren Buffett, one of the greatest. I'm Scott. Welcome to the channel. I've been trading and investing in the stock market for over 25 years. From humble beginnings to healthcare giant, in the early 1970s, the American healthcare system was rapidly changing, costs were rising, and families across the nation were searching for affordable, reliable access to healthcare. Out of this landscape, in 1974, a small but ambitious company was founded in Minnesota, CharterMed Incorporated. This company would later evolve into United Healthcare Group, today one of the largest and most influential healthcare corporations in the world. CharterMed was designed as a health maintenance organization, or HMO, to coordinate benefits and bring down costs. By 1977, the company reorganized as United Healthcare Corporation with a mission to improve the quality and efficiency of healthcare. United Health set out to redefine how medical services were delivered in America. United Healthcare grew quickly, expanding across the United States, building partnerships with physicians, hospitals, and employers. And in 1984, the company went public on the New York Stock Exchange, trading under the ticker symbol UNH. For investors, it was an opportunity to back a new vision of healthcare, one blending financial innovation with medical necessity. Throughout the late 1980s and 1990s, United Healthcare launched new subsidiaries and services, broadening its reach. The creation of Optum, its technology and services arm, would become a defining feature, harnessing data analytics and pharmacy benefit management to reduce waste and improve outcomes. Yet, success did not come without adversity. Like many in the healthcare sector, United Health faced challenges. Critics questioned HMOs for restricting care. In the mid-2000s, the company faced one of its greatest corporate crises, an options backdating scandal that led to leadership changes, fines, and reputational damage. United Healthcare's resilience was tested, but the company endured, reorganized, and recommitted to its mission. Adapting to the 21st century, United Health transformed into United Health Group, a diversified healthcare giant with two powerful engines. United Healthcare, the insurance arm serving millions, and Optum, the data-driven services powerhouse. Together, they created a system that touched nearly every aspect of American healthcare: insurance, pharmacy, technology, and care delivery. When the COVID-19 pandemic struck, United Healthcare Group was on the front lines providing coverage, supporting providers, and distributing billions of dollars in aid to care systems under stress. The crisis reaffirmed the corporation's central role in national healthcare resilience. Today, United Health Group stands as a global leader, serving over 150 million people across the world, employing more than 400,000 people, and generating revenues exceeding $350 billion annually. UNH consistently ranks among the Fortune 5 companies in America. From its humble beginnings as a small health plan in Minnesota to its evolution into a Fortune 5 corporation, United Health Group's story is one of vision, adversity, and achievement. With innovation at its core and healthcare at its heart, UNH continues to shape the future of medicine, technology, and wellness for generations to come. If you like these types of documentaries, subscribe to the channel and comment below what's on your mind. Now let's take a look at the fundamentals. United Healthcare Group, September 18th of 2025, today closed down $6.79 at $334.82. We look at the year range, the 52-week high and low. The low is 234.60, the high is 630. The market cap is 303 billion. The average volume is 17 million shares traded per day. It's got a 14 PE ratio, which is considered to be on the low side. And for you dividend lovers, it pays a 2.64% dividend. In 2020, the revenue was 257 billion. The net income was 15 billion. When we fast forward to 2024, the revenue is 400 billion and the net income is 14.41 billion. The revenue is up 7.71%. The operating expense is down, but the net income is down 35.64%. That's a net profit margin of a negative 40%. Earnings per share is up 10%. Technical analysis. Now we're going to take a look at the charts to see when is a good time to buy into this stock, so we're not guessing. Even Warren Buffett does not guess. We are currently looking at a 20-year monthly chart. Each candle represents a month. As you can see, for the past few years, the stock has been in a tremendous bullish phase. We have occasional periods of pullbacks. These are areas that you want to get in. So this pullback here, this is pretty substantial. So this is a 1-year daily chart. When we look at the 10-day moving average is the white line. The purple line is the 21-day moving average. The green line is the 50-day moving average. And the red line is the 200-day moving average. As you can see here, the moving averages are starting to get in alignment. These eventually will break through and pass over the 200-day moving average. But where do you want to buy into this company? Now, Warren Buffett, he bought in here. The stock gaps up on tremendous volume. And what this actually also did in the world of candlestick charting, this area here is considered an island bottom. And what an island bottom or an island top, in this case it's an island bottom, the stock closed here, gaps down, and it opens up here and it trades for several days, right? And then it closed here at 270, 291, and then gaps up into this range. This is considered in the world of candlestick charting an island bottom, and this is a very, very powerful bullish pattern. Now, the catalyst for it to establish its bottom and gap up out of here was Warren Buffett saw that the company was completely oversold and saw extreme amount of value come in. If you would like to stay informed, subscribe to the channel and comment below what's on your mind. What we want to look at is we're going to zoom in here. This area here is where Warren Buffett came in. Now, if you look, the volume was substantial and extreme. And then several days after that, the stock sells off. And then look at the volume, how the volume declines. These are good areas of entry. Now, typically you want gaps to be filled, but it doesn't look like this gap is going to get filled anytime soon. But you're going to have a level of support at 270, 291, a level of support at 294.71, a level of support at 321.65, and you're going to have a level of support right here in the 340 range. So today it closed at 334.82. So we're right at a level of support. So essentially, if you wanted to trade this, but you have to understand, you might take a little bit of downside here because you're going to have a lot of resistance going forward. But if you are investing in this company, well, that's a different ball game. If you are trading into this company, this looks horrendous. All these people have been underwater who's invested in this company, and some of these people are going to want to get out. So this is going to cause resistance going forward. We're going to have a lot of resistance all the way back up to the top, but that's okay. If it's good enough for Warren Buffett, it's good enough for me. So you can scale in. Let's say you wanted to put in $10,000. You can scale in right now at $2,500. Your second position is going to be at $321.65 if it gives it to you. And then your third position is going to be $294.71. And you want to wait for your last and final position for a major downdraft in the market. That's going to complete our analysis. The importance of technical analysis. The more you implement in your process, it's going to increase your percentages of possibilities. It's also going to increase your percentages of probabilities. And ultimately, this is going to increase your percentages of profitability. And that's the name of the game, my friend. If you are looking for more opportunities to invest in incredible companies, check out this link. God bless and happy investing.